All right, the third example is RH. This was ultimately last night's biggest disappointment. But if you're watching the after-hours action, you would have had no idea whether the quarter was good or bad. The actual results were mixed. RH same-store sales came in at 9.7%, and I was looking for 12.6%. And their sales were weaker than expected. But they still delivered a modest earnings beat. Still, that was enough to make the stock pop initially because RH had already lost nearly half of its value since the stock peaked last summer, okay? Now, get this. Unfortunately, those early buyers, the people who paid up here, well, they made a mistake. RH's guidance was mixed. You got that after. But overall, less encouraging than results. And then the guidance brings it down here. They had an okay forecast for the current quarter, coupled with some not-so-hot full-year numbers, slowing sales growth, weaker operating margins. And in response, the stock simply gave back everything. But get this. ROH pirouetted. Why? Because the company announced a 3-for-1 stock split. So suddenly everybody's crazy about it. Remember how much you made if you bought Tesla on the stock split? But stock splits create no value. This is pure financial alchemy. But a lower dollar price per share tends to entice individual investors. As much as I like stock splits, none of this stuff matters if the underlying business is struggling, and it turns out RH is. Now, if you waited for RH's conference call, you learned about the struggle. During the Q&A, CEO Gary Friedman repeatedly sounded the alarm about inflation, saying the Federal Reserve has no idea how bad things have gotten. He said supply chains haven't gotten better at all. He said RH's business slowed significantly when Russia invaded Ukraine and planned store launches were being delayed. At one point, Friedman truly made me feel like people weren't buying goods of late over sheer gloom in Ukraine and maybe sheer pandemonium in the bond market. Now, I'm not quite sure what point he was trying to make, but it definitely was not what shareholders wanted to hear. So anybody who bought up here off the stock split, oh, my, you were just crushed. Yeah, and the stock ultimately closed down 15%, 334. So you got excited about the stock split here. You got excited about what looked like an upside surprise here, and you just got crushed. The bottom line, oh, it's great that Robinhood wants to extend its trading hours, but keep in mind that you're playing with fire here. One mistake in after-hours trading will wipe you out much faster than a mistake during regular hours. When everyone has the same information, there are more bids and offers, and the playing field is more or less even.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.